Good morning all, hope you're having a nice weekend. We're in a state of caution and the reason for that is that we've had quite a drop on the technical scores. However, very likely, very typical and very predictable is that the herd are sold into the weekend. Because they're sold, we're probably going to have an okay open for risk. Right? So it's going to be a little bit boring, I think, this week. It's going to be risk on again. And also, it's worth noting that they'd gone long shorted CAD yen and they'd gone long dollar CAD the most, which I'll just share because I just reset the data. There, that's what we were. That's what's happened. And they shorted basically very mixed, to be honest with you. They've gone long gold, so it's worth noting that. And this is how they were. And they're very long on the yen, but that's typical. And they shorted Aussie over the week, okay, and then sorted CAD. All right, so that's that. Indices are slightly mixed, and the US yields were fairly mixed as well. We had like 0.01% moves, so hardly any change at all. Come to Sunday, the biggest move was dollar Swiss. It was a massive sell, but it's only just a sell, so it's very positive and like positive, okay, so it's not quite ready for a buy because they were really long and they're only just quite long. Actually 7.9 is still extreme, to be honest with you. Gold's shifted and it's possible we're going to go into positive territory. If we do, then it will be a sell at the big picture. Okay, so I guess it doesn't really need to be a long video because we're just going to cover indices. The robot, as you might know if you watched Friday's video, it's performing well. And don't forget the robot's available for anyone on the paid tier. So you can join the robot for $5 a month if you wanted to. And it's going really well. And of course, you're welcome to upgrade your tier because at $5, you don't get much at all apart from a very basic spreadsheet and robot access and the daily videos. Okay. So this is them selling on the US 500 and they sold into the weekend. So I think this is going to probably have some support. But we have to remember there is a little bit of scary news coming out from Iran and Israel, and also got the Russia-Ukraine thing as well like that. But that's been ongoing for ages now. Yeah, so US 30, the Dow Jones, we had the crossover, as you can see, and they had to sell it into the weekend. If you think about it, if you were trading indices, you probably wouldn't want to hold over the weekend because you don't know what the weekend's going to hold. Like it could be a scary event and a legitimate scary event, and then you've lost your profits. So they think, oh well, I'm going to protect my portfolio. I'm not going to reduce my exposure to the indices, and by reducing that exposure, it's actually shifting the sentiment, and of course they're probably going to get punished, and it is what it is. So there's DAX, and they sold here. Now the interesting thing is that they sold here, and they got probably proper punished, and then they sold again, but they sold at this candle, which if you look at it at that point in time, it's quite heavy. Okay, and then we did this big decline, and then we had pushed up higher, and that pushing up higher, that wick is very likely to do with that circle, in the fact that we had the crossover where they sold. And so like I said, it's going to be a little bit of a boring week. Boring if you are looking for exciting price action. It's going to be probably up, but don't forget with these indices we do have some resistance overhead. Okay, so these are old price boxes. So we may come back up there again, 18,600. So it's 500 points away. So it could be a bit boring. And there's, well, oil I'll talk about, but it just did this weird blip. So I'm not sure how reliable that blip is and whether or not we should ignore it. It looked like it was probably just a data glitch. I'm not entirely sure whether or not that was actually genuine. And we had a big exodus of retail positions at that point. I don't know. It doesn't look like there was a sufficient move to explain that. Okay, we had this big down candle, but it wasn't that scary. And so because they'd sold, we should be above that box. However, we're just slightly sideways there. And there's the buy at the crossover down here. So that's how you can use it. You're looking for longs if we get the crossover, and then you're placing your stop below the swing low. All right, and then look at that trade. Right, that's how you can use it. That would have been a fantastic trade had you called it. You're just looking for the crossover, knowing where your stop is, and if you know where your stop is, then you can at least target your take profit. You're looking for a 2-to-1 ratio. So if you're prepared to risk, say, £100 or $100, you get $200. That's okay. But you would have seen how this would have had more legs. So you could have probably got a 5-6R plus on that. Okay, so that's just how to do it. Remember the crossover, stop loss. Okay, and then gold. Yeah, this probably caught a lot of people off guard. This moved, I think, from the US Treasuries because we have the correlation of gold and those US yields, and they obviously perked up quite a bit. And there we came. And it's all, I guess it would just all really have to depend what's going to happen. We're 45%, we're 6% away from this becoming a sell. If they try and buy this dip, it's going to be bad for them, and then we'll be into positive territory, and we'll be red, and then it will be a sell at the big picture, and then we'll be not returning to those highs for a while because it means that the herd are that long, and they're going to be trapped. So it won't be any reason for price to go up higher because it will mean that those guys get paid. So that's that, okay? Great if you called it. Well, that's kind of weird. So this is the kind of thing that I get on my Telegram because I'm an owner of a fairly large public group. I get quite a lot of spam. So she's going to get blocked, I think. So that's kind of annoying. That was a bit of an interruption, wasn't it? But so far, I think we're going to have like a bit of a slightly boring week ahead of us. We are in the caution phase, but that could probably go to complacency quite easily. And after complacency, it's euphoria. All right, and then we might be back to euphoria again. If so, a little bit boring, but it is what it is. So I'm going to reset the sheet now. I'm going to do the calendar, and so that's all ready for the open. And then, with any luck, Kristen's going to be around today for the COT data, but I'm not sure where he is in the world. He was traveling, and he was in Cambodia last week, so I'm not sure if he's back home. If he isn't, there'll be no COT video. Okay, so trade safely, and hopefully the data was useful in Discord, and we'll have to see what happens with gold. I know a lot of people are trading this, so be careful if we go to net positive. Because then we likely not revisit these highs for a while, and there's going to be a lot of trapped traders, and they're going to be reluctant to let go of their positions because no one wants a loss, and they'd rather hold on to their losses. However, they're not aware of the sentiment. That's the trouble. Okay, so trade safely. I'll speak to you guys soon.